G'day all, Ben here, East West. Going to have a look at gold and silver, the US dollar. Also, we'll just have a quick look at the euro and the Japanese yen, and we see what we can see in this market as gold goes on a blue sky breakout. So, just starting off here with the US dollar. Pretty weak close. I mean, it hasn't really gone anywhere from where we last looked at it last week. So we know we had come up here, we had tagged the 50, we'd come down, and we began to bounce back. But of course, Friday has seen the dollar index at the very least get sat on its backside. So that's interesting. I kind of thought after this push up, after sort of the maniacs calling for 50 in September got the air let out of their tires again, that maybe we might push back up, and that's kind of what I was looking for, is that maybe we might get a three-wave sort of corrective bounce before we continue down. We didn't get that. We're still just soft down here towards the bottom. And then when we sort of think about what's coming up next week in terms of data, it's not so much US centric, but there is quite a bit coming out that could influence the US dollar, I think, especially in terms of the dollar index. So, of course, we've got Canadian CPI that will be watched. And then also we've got on Thursday the 22nd, we've got a lot of the European flash PMI numbers coming out. So they will undoubtedly have an impact on the current direction of the euro, which we will look at shortly. And then, of course, we've got the US flash manufacturing PMI, another thing that will be watched. But, of course, the big one, I think, is next Saturday when the Jackson Hole speeches come through. So not Monday coming up, but the following Monday, the landscape could look a fair bit different from what we're seeing right now. So just when we think about the US dollar in terms of its strength and weakness against its major components, especially in the dollar index, here's the dollar yen. Now, obviously, the US dollar got smashed on the carry trade unwinds and the BOJ changing their rates. But there's something very interesting, because this is very, very precise, this trend line, but something quite interesting has gone on here. We failed to make it back to the 50, but look what we've done. That is a very long-term trend line, and I've made an effort to make it as accurate as I can in terms of touches. There's quite a bit of precision. Come back and touched it, shied away from it. So does that mean we can expect more US dollar weakness? Well, overall, yes, I expect more US dollar weakness. I was just thinking that perhaps we might get a bigger bounce than what we've got, but maybe we've had our bounce already. And the other thing that we got here now is the euro. Now, this one's sort of flying in the face a bit because, of course, the fundamentals in Europe, you could argue, aren't perfect, especially Germany. But nonetheless, the euro is now starting to break out of this wedge, so that, would think by proxy will put a little bit more pressure on the US dollar. Now, interesting here, okay, so coming off this pivot, and I don't know why this pivot is so important. You can maybe backtrack and look for yourself, but when you come in and look, almost on the 61.8. Now, what's interesting here is that if we come back to this pivot, that is also directly on top, well, it's just penetrated the 50. So you can see the confluence. I don't know why these two pivots have been picked by the algorithms to decide to step up here, but that's what they've done. Now, we went into this wedging motion, but we are now breaking out of that wedging motion. That, to me, would just suggest more pressure on the US dollar, because maybe the whole world expects the euro to fall over, and it's not, and people are going to start to get squeezed. Now, I'm not making any sort of prediction, or I don't really have a view on this, other than it looks to me, just technically, putting everything else aside, that it is breaking out of a wedging pattern, and it looks like it's breaking out to the upside, rightly or wrongly. Now, this could, of course, turn around and come back down. I don't know. But the point is, hard right edge, this just looks like it's going to put more pressure on the US dollar. And so that brings us to gold. And so looking at gold, I was kind of a little bit concerned that maybe we were just starting to wedge in here, but of course now we've got a blue sky breakout, okay? I.e., there is no reference point behind this. This is as high as it's ever been. Like, there's nothing going back here, okay? You can do the whole history of gold. It's never been as high as what it is right now, all right? So thus, we have a blue sky breakout, okay? Because there is nothing above but blue sky. Now, this is kind of where the Elliott can be a little bit helpful, because we don't have any reference points here. We can't look left on the chart as you usually would to go back and find historical points of reference. So let's just move in here and have a look. Now, this is about where we were last week. Actually, I'll just look at this. Yep, that's pretty much, this is a 4 hour chart. So this would have been the close of the gold market on last Friday. Now, I believe this was the kind of Elliott setup we were looking at. I was a little bit unsure, but I was thinking, okay, well, look, what am I looking for? Is the extension up to the 161.8 into this sort of area that ties in with these old tops, where you might expect a bit of resistance because, of course, we resisted here and here. And so what happened? We went straight to it. And then we've started to chop sideways, which is what you would expect for wave 4. So in wave 4, you would expect a big, choppy, sideways, awful mess that you wouldn't try to trade. Now, a few things to note here about the general idea of wave 4. So this would be the general pullback zone that you'd be looking for, but you're also thinking that it can come back into the range of the wave of a smaller degree back here, but you don't want it to be. It cannot break the top of wave 1, otherwise it disqualifies it as an impulse. So what we are expecting is a big choppy mess somewhere through here, and this is the general range, possibly down to here. Can't go beyond that red line. So what happened? Big choppy mess. Okay, and that's what you'd expect. Before then, we got another move up, and we're now back on the hard right edge. So, you know, that looks like pretty classic sort of wave 4 action. That's what you would expect. So I guess the question is, well, how much further would this go? Okay, well, you know, this panned out as we hoped it might. It came up to the sort of area. It pulled back in very sharp. It was quite a sharp pullback, but very messy. And now we've got this extension. So there's a couple of techniques you might use here. So one of the ways you do it is, you know, the bottom of wave 4, you would put on the 38.2% of the entire impulse. But of course, the fifth wave, this is a fifth wave, it's already gone further. So it looks like it's going to extend. What do? We just drag the 61.8, and this becomes our wave 5 target for this move. Okay, so that's 25.41. It's round about there, not exact, but you know, this is the sort of zone that we are now looking for this move to complete. Okay, and then after that, we would be looking for the 3-wave pullback. Even coming in closer here, I mean, this looks a little bit more fluky to perhaps work out. Maybe a 1, this is a 2, this is a 3, get a 4, get a 5, like that, something like that. But I'm not going to make, I mean, look, this is if this is wave 2, this is very, very flat, and there's hardly any pullback there. So that makes me a little bit unsure. I would expect then that we would get some sort of sharp wave 4. That could be your next point of call. But yeah, I think at the moment the Elliott just gives us a bit of structure around to sort of, you know, what we're thinking about. But we've just had no retracements here. I mean, this is 38.2 pullback. It's very, very shallow. You know, I'd still be looking at this now and thinking, okay, well, I would probably, if I was looking for a trade, I would probably, just let me switch this retracement over. I'd probably be looking at this. I'd just be tracking this and waiting for something that came back and tested into this zone. And then from there, I would make my decision. So I would still stick to the measured move target, wherever that's going to be. If the measured move target happens to sit on top of that potential wave 5 area, then all the better. But what I'm not doing is I am not as keen to buy it up here. I would be sitting back then and waiting, because that looks like it may exhaust. I'm not saying it is exhausted yet, but at some stage this will have to come back, rest, and retrace. So that is kind of what I'm on the lookout for gold next week. So just jumping over to silver now, this is where we left it last week. And the game plan, of course, was to keep tracking this movement and wait for the pullback. Okay, I think I split the 50 and the 61.8 just as an example trade. So were you listening? Well, let's just step through this and see how it played out. So we've got nothing yet. Now we've got a new high. So we need to just bring our retracement up a little bit to encapsulate that. So now we are just tracking this, waiting for this. Okay. We'll step through here a bit further. We've got a little bit higher. Bring it back up. Yep. And then keep going. Higher still. Okay, so that's the high. We're looking for the pullback to the zone. Nothing yet. Nothing yet. And there it is. Okay, so there. That becomes the trade setup. Okay, and when you look at this, okay, This may be a bit fluky as an impulse, but what I can see is a strong move out of the zones that we highlighted last week. Strong move up, 3 waves back into the retracement zone. Okay. Now, if you actually had to split that's half the retracement zone. So if you had done what I said, you would have missed the trade by not much. Yeah, 4 cents would have been painful, right? But so, that's maybe it's best to do a little bit at the 50, a little bit at the 61.8 if that's the way you want to play it. But as we continue to step on here, what do we got here? Let's just tie this up a bit. And yes, I know what happens, which is why I've brought in the second target up here. But let's just step through and see what happens. First target, and then as we move through further, and we're now on the hard right edge, we're almost on the second target. Okay, so that played out quite well. Was anyone watching? Did anyone do that? Nah, no one watches these videos. Why would you want someone to give you trade advice that works, or more often than not, when you can be entertained by someone who's just feeding you a line of BS? I don't know. That's why I don't know if I'm going to do these videos much longer, because I don't think anyone really gives a shit. I don't think anyone really cares that I can show you these trades and you can profit from them for free. I don't think it matters to most people. They're not interested in profit. They want to be entertained. That's cool. I get it. Nonetheless, I'll stop whinging now and move on. And then what do we do now? It's the same thing again. We didn't get a retracement there. We just keep tracking. Okay, we keep on tracking. But now we are starting to come into the realms of, and this is where we may hit a little bit of a hurdle, of course, because we've got these tops just coming into play. Okay, that of course lines up. So even taking this from an Elliott perspective now, I mean, you've got the move coming back. Where do we sit? We've just touched over 1-to-1. So whether or not this is an impulse yet, I wouldn't say. I'd probably like to see it extend a little bit further to say it was an impulse. But it's certainly tracking quite well. We've broken very high. So I'm on the lookout for the retracement here. I don't know if I'd want to chase this into this zone right here, because I guess the other thing you've got to keep in mind here is, sorry, I just had to correct myself a little bit. So yeah, coming off this top, we are now just beginning to run into the top of the retracement zone, which ties into this structure. So, the point here being that, we may be very close to being on the verge of just topping out here and just the market being turned away from this major level on its first visit and coming back down. So there's 2 potential areas that I would target. I would be targeting this area between 27.40, 27.70. That would be the more conservative area. Or you can be a little bit more aggressive and try to take, and that's assuming this is the top, right? Because we don't know that's the top. It might extend further. You'll be a bit more aggressive and take this one, 28.10 down to 27.88. That would be the more aggressive. If this proves to be the top, we might extend a little bit further than those areas will change just a little bit. But it's a simple game, guys. Just got to keep going that way. So look, I'll leave it there. Thanks for watching. Look, show some love. Don't forget to hit like and subscribe. I don't get much traction with these, so I've said this before. I don't know how much longer I'm going to keep doing them, because I like doing it for you guys, but 100 views a week, it's not worth my time. So thanks very much though for people who have been watching. Thank you for liking. Don't forget to subscribe, and maybe I'll see you next week. Bye for now.